I will go ahead and get started. So good evening, everyone. Thank you so much for joining us today. We're super excited to be able to host this class for North San Diego County Association of Realtor members. Today, we have Ryan from Reverse Mortgage Educators as our instructor to show you how you can earn more listings with the reverse mortgage for purchase. So just a couple of things before we begin. First, if you'd like to receive a copy of this PowerPoint, go ahead and send me your email addresses in the chat box or the Q&A. Next, we will be answering questions throughout the class today. Again, you can put those questions in the chat box or the Q&A at any time, and we will be answering those questions as soon as possible. Finally, we are recording this class, but please stay until the very end if you can, as we will talk about how you can take advantage of our complimentary software and marketing materials to reel in the next listing. Okay, Ryan, you can take it from here now.
All right. Hey, we've got a good group tonight. So, man, you guys worked all day and then you're hopping on a reverse mortgage webinar. Are you guys okay? What is wrong with you guys? No, everybody, I'm so glad you're here. And I'll make it through the material quickly, hopefully get all your questions answered, and then we'll go from there. All right, so what I want to do today, hey, we're going to review reverse mortgages, right? In case you don't remember how they work or refresher, I'm going to run through how they work. I'm going to spend a little time talking about like events today. Like this class is based on things that are happening as of right now, including like bank failures and interest rates and all this stuff. That stuff does affect us. So I want you to know about that. And then finally, how this stuff relates to your business. And I hope that's the most important part about this for real is what does this mean for a realtor? And I think your time is well spent tonight. All right. So let's get to work. You know, after working with you all, I've been doing reverse mortgages for about 16 years. And I used to not have gray, when I started this business. But something I learned from you all is how I've found realtors have been able to have reverse mortgage help their business. So I'm going to run through that real quick, and then we'll get to our review on the reverse mortgage. So the first thing I really want you all to know is when a client is asking about a reverse mortgage, I can certainly tell you that they never dreamed about getting one. They didn't want one when they were younger. They didn't think, hey, when I'm getting older, I can't wait to get a reverse mortgage. If a client is asking about a reverse mortgage, it's because they're a homeowner and they're like, man, I need to figure out something with cash flow. I've heard a reverse mortgage can get rid of a mortgage payment. I heard it can give me some cash out. So I'm going to ask about this thing because really I have a problem. I'm trying to figure out better cash flow. I'm a homeowner. So let's table that thought for a second, because now I'm going to bring in what is happening with reverse mortgages as of today, right? And that is when the interest rates started going up about a year ago, our loan amounts dropped. So in other words, as interest rates increase in the reverse mortgage world, how much money we can lend to people drops. So many people who thought they were just going to get a reverse mortgage because they said, I want to get rid of my mortgage payment, I'm going to get some cash out. Maybe they even looked into it a year ago. Maybe their neighbor got one a year ago. And then they got a hold of a guy like me and I'm like, hey, how old are you? Because I always got another age. And like, maybe, hey, I'm 62 years old, Ryan. I'm like, man, if you have a $900,000 home, like not too many months ago, I would say, I'll give you $450,000. Now what I'm telling them is about 15% less, like 300 and something on a 900 and something $1,000 home. So since we've seen lower loan amounts due to rising interest rates, many people who inquire about a reverse are not going to get one. As a matter of fact, it's down to about 35 to 40% of the people that actually, inquire about getting a reverse mortgage can actually get one. The rest of them find out, oh man, that reverse mortgage is not going to work out for me. Oh man, I can't get enough money. What do they do? Does their problem just go away? Do they find cash somewhere? No. More than ever these days, I'm having conversations with homeowners who I can't get enough money for on a refinance reverse. Remember, I'm talking about refinance, and saying, look, you do have another option. We need to talk to your realtor because maybe what we need to do is talk about you downsizing and buying a smaller home. So sometimes that question, what is a reverse mortgage, can lead to a listing. And then you should know that we have a loan called the reverse purchase loan. This allows people to buy a home Well, maybe they don't qualify for any other financing. So imagine a client who did want to move, but when they checked out conventional loans, and interest rates are up on those, maybe they don't want to have to take out a big payment, maybe they don't qualify, but now I have financing where they can actually qualify for it when they don't qualify for anything else. And then I say, after you use a reverse mortgage to buy a home, your payment becomes optional. I'm going to talk about that. I'm having a lot of conversations with you all and your clients about this right now. Finally, there's about 54,000 active reverse mortgages right now. And that's Southern California. There's a lot of these things that are in place right now. And can I tell you that although the heirs can inherit the property when the loved one's passed away, sometimes it's not that easy. Sometimes they find it's downright difficult to get everything done to inherit that home properly, to get control. Well, I want to help you. If you run across the house with a reverse mortgage or you go out looking for them, I want to give you a way that you can have the heirs and that homeowner say, this is the realtor we need to use when this home is going to be sold. And I'll talk more about that coming up. And then one more bullet point on this thing here. Again, with interest rates going up, loan amounts are down. So let me explain to you what's been happening the last 7 years. We've been able to refinance a lot of reverse mortgages. So a client would get a reverse mortgage and then they would maybe use up the available cash, but their house still had equity and rates were low, values were good. And they'd call us up and they say, hey, can I refinance my reverse mortgage to get more cash out? I'd say, sure. Guess what's happening now? I'm saying no. Sorry, rates are higher. The cash register is closed on refinancing reverses. So what do those people do? Even though they don't have a mortgage payment, some of them still need more money out of their house. So what am I saying nowadays? Same thing to the person that's asking about a reverse mortgage for the first time, they can't get one. I'm finding myself telling people that have reverse mortgages, I can't get you a refinance. If you really need money, we need to get you to sell this home, get to a lower priced home. And getting to the lower priced home is what allows more cash to be taken. And then we do a reverse purchase. So I want you to find houses with reverse mortgages. I'll talk more about that because it's becoming part of your business. All right. So these are the 3 top ways that I see reverse mortgages actually playing into the hand of a realtor's business, and maybe not so much me, the loan guy. All right. Let's learn more about these in depth. Number 1, let's just do our review on reverse mortgages. By the way, it is an evening class. I've been working all day. So compared to this morning when I was doing this class for you all, you might find me stumbling a little bit. Boy, I get tired as I get older, All right, so reverse mortgage. Let me tell you what I think of reverse mortgage after doing them for all these years. I think it's just like a normal loan. Like my 30-year fixed on my house, that's basically, I think a reverse mortgage is the same way. What the difference? And let me explain what I'm talking about. If you were to get a regular loan on a house, much like you all might have right now, you've simply borrowed money to either buy a home or refinance a home, right? Let's say you've borrowed $400,000 from a bank to refinance or to buy a home. You get a statement the first month that says, I owe $400,000. Here's the payment that's due. You send in that payment. You get a statement the next month. It shows your balance has gone down a little bit and another payment is due. So you've just borrowed money on a home. That's it. A reverse mortgage is the same way. You're simply borrowing money to either buy a house or refinance. And let's say you borrowed $400,000. And I'll give you a statement. It shows you owe $400,000. It will also show the cost of the loan for the month. Here's the difference. With the reverse, you can say, I think I want to keep that money in my pocket. Let's say it's $2,000, right? I think I'm going to keep that $2,000 in my pocket this month. I don't want to send it in on this loan. What's going to happen to you? Well, nothing. Next month, when you get a statement, you owe $400,000 and $2,000. So when you get a reverse mortgage, all you really have done is turned a loan into a way to say, I'm not going to send any money in, and next month I expect my balance to go up by whatever I did not send in. We in the reverse mortgage industry don't care what you do. Whether you send a payment in or not, we just don't care. We're just going to keep tally of the interest that doesn't get paid and add it to what you owe. We have to wait in the industry, right? Reverse mortgage companies have to wait to get paid when the home sells. Sometimes we might not even get a payment ever until the home sells. So we wait a long time to get paid. Now, a client, of course, is going to ask this question because they've heard stories. And I can say maybe those stories are true a long time ago, but the products we have now, even if a client, let's say, got a loan at 62 and they lived at 92, that's for 30 years they had a reverse mortgage, right? And let's say they didn't make a payment that whole time and they pass away, or no, they'll pass away, they're still alive. After 30 years of having a reverse mortgage and they never made a payment, they might say, Ryan, do I have anything to fear? Can I ever owe too much? Can the property value drop too low? Do I have a reason to fear that I will get a letter saying I owe too much or I have to do something? And with the reverse mortgages that we have, especially the government insured reverse mortgage, which has been around since about 1990, the loan has no endpoint. It's for the lifetime of the client. So if a client lives to 100 and they have a reverse mortgage for 40 years or whatever it may be, hey, they still got it. We're not saying you've lived too long, you owe too much. We're saying we got to wait. We got to wait till you pass away and the house sells to get any money back. This is a biggie. We can give loans to people and maybe they don't qualify for any other financing. And that doesn't mean every single person can qualify, but we sure do get people loans many times when regular financing will not. As a matter of fact, I'd say maybe 70% of the people that I have and I'm doing loans for and I've done loans for wouldn't qualify for conventional financing. So I think that's so important, especially in a purchase world where you all live, where a client may need to sell that home. They want to sell the home, but they've looked at their financing options to buy their next home and they're like, that's not going to work for me. I guess I'm not going to talk to a realtor. And this may be a client who's telling you, I don't want to move. I want to stay in my house. Don't worry, I'm not going to sell it. But maybe they're saying that because they've realized, what am I going to do? Sell this house and just use cash to buy my next home? So what I've seen a reverse purchase do is give a client the actual ability to say, man, I can qualify to buy a next home and get a loan. Then, of course, when they use a reverse mortgage to buy a home, okay, the payment is optional, okay? And by the way, Ida, you just chimed in with a question, and I'm going to answer that thing right now because that's what we're talking about. You said you mentioned for the life of the loan, Ryan, what if they have a reverse mortgage and there's no more equity? Yeah, that's our problem. That's not the client's problem. If the balance has gone up and the housing market's gone down and there's no equity, the house is upside down, that's our problem. The client, they're still there. Hey, every day, doesn't matter. So thank you for that question. It was a very timely question. That's why I answered it so quickly, because like you're right on the money with that question. Okay, so hopefully that answered that for you. Now, we don't care if the house is upside down, they're still living there. All right, so back where I'm at, right? So the reverse mortgage, purchase or refinance loan, again, giving the ability to people to own a home, to purchase homes, to refinance homes when maybe they wouldn't qualify for a loan. Now, a client might say, Ryan, I want a loan. I don't want a reverse mortgage. I don't like them. I've heard about whatever they might say. And I'm like, okay, how about this? How about if I give you a loan and you make a payment on it and I don't call it a reverse? Because if you get a reverse mortgage and you make a payment on it, it's not a reverse mortgage anymore. You've just treated it like a regular loan. You're paying the balance down, except there is one thing that's different. If one day you say, I'm going to stop making a payment on it, again, we don't care. Now let's start turning the balance the other way. It's all how the client wants to run their loan, not we in the industry saying this is what you have to do. We say, here are your options, right? All right, so back to my other point that I was talking about with lower loan amounts these days, right? Okay, I'm talking to a lot of clients these days and I'm telling them the loan amounts for a refinance. And they're like, Ryan, I owe this much. If you can't get me enough to pay off my loan, I can't do a reverse, right? And I'm like, that's right. Or if they're saying, Ryan, you're telling me on my $900,000 house, I'm only going to get a loan amount for whatever it may be, $400,000 because I'm young. Like, yeah, because we lend money based on age. And they say, well, is there other reverses out there or what's the deal? And I'm like, I know about every reverse mortgage there is. I can't get you any more money than what this is right here. And they say, okay, well, some of them just say, well, thank you very much. We'll figure something else out. Other ones would say, Ryan, what else can I do? And I'm like, well, I'm going to tell you things that you kind of already know, but you don't want to do. I don't have any more financing ideas for you. I've done every loan there is for the last 16 years, right? I don't have anything else that's going to work for you. You can rent out rooms. That's not a great plan, Ryan. Well, thought I'd mention it. You can go to work and work longer hours or re-employ yourself Okay, Ryan, here's the door. I'll see you later, right? I mean, but literally that's the conversations I'm having. But I do say this, I'm like, look, I know you might not want to sell your house and maybe you have never thought about it before, but if you really did find yourself where you're like, you have to do something, I can do a reverse mortgage for you, just not in this home. It has to be a home that's downsized, a smaller purchase price, because it's the action of going from a more expensive home to a lower priced home that makes a reverse purchase work. It's not the client that's not qualifying for the reverse many times, it's the equity position in their house. So by selling and buying a downsized home, the reverse purchase now is starting to come to light. And I'm saying it's coming to light more and more because I'm having more conversations. I'm telling people this is all I can get you on a refinance. How about a purchase? Realtors are calling me, telling me, Ryan, what can this client do? So you all, realtors, that's you guys, right? Now, there are going to be some clients that do qualify for a refinance. And for them, hey, maybe that's cool, right? And in that case, I just want you to at least have an idea that works. If a client can get a refinance, I say, here's how much you're approved for, right? Let's say they're approved for 400,000 and they owe 300,000 on the house, right? Just to pick numbers. And I say, okay, I'm going to pay your $300,000 loan off with the reverse mortgage. So that gets rid of that mortgage payment. I'm going to give you 100,000 extra, but you tell me what you want to do. Do you want it up front? Do you want to receive it in installments? Do you want an equity line where you get to where you want to? So we have all these options for cash out on a refinance, right? So it's up to the client on how they want to do that. But whatever they do, well, however they pull the money out, it's the same thing. They'll get a statement. Maybe I paid off their $300,000 loan and they have 100,000 available on a line of credit. Okay, that's your statement. If you pull that 100,000 out at any point in time in the future, your balance will go up, but you still are not making or forced to make a payment. It still is at your discretion if you want to pay what the interest cost was for the month. Let's hop into this purchase thing, y'all. So I put 74 at the top because the older you are, the bigger the loan amount. Let's say this is a client who did sell their house. Maybe a reverse refinance was not going to work for them. Maybe they did need to get to a different area. Whatever it is, your client, if this is your client, has said, I got to sell my home. You sell their home for $950, right? Is every house in California worth $950 right now? Maybe still. Seems for a while, didn't matter where you go. Houses were worth that much. But anyways, let's say this client sold their house for $950 and now they have $470 in their pocket, right? Because they had to pay off whatever loan they had. They had to pay the cost of selling the home and they have $470 cash. And they're like, hey, realtor, you just sold my roof over my head. I have no place to live. I got $470. I need to find a house where I can buy it. I can keep some of my money in the bank because I didn't have any money in the bank before. I'm worried about taking on a mortgage payment. I'm worried about qualifying for a mortgage. So what do you got? Well, how about they find something for $600? And that's even high because here's what I see a lot of right now. People from LA, Orange County, San Diego, they're moving to Beaumont, they're moving to Marietta. They're finding brand new houses for $500,000, right? And that's commonplace right now. So this client here, they found a house for $600 they like. They have $470. What am I going to do to them? I'm going to say, I need you to put down $329. You have $470, so you got plenty of money. I'm going to give you a loan for $271. So you've bought the home with a combination of your cash down and me giving you a loan. You didn't spend all your money. You still got $141 in the bank from the $470 of the sale of your previous home. So you see, downsizing, putting money in the bank, doing a reverse purchase means that they haven't committed to needing to make a monthly payment unless they want to. So this is nice. Gives them the opportunity to use and control cash flow. Maybe they're like, Ryan, I don't want to have a full reverse. I'm going to send in half a payment every month. I'm like, good for you. Your balance will go up slower, but if something ever happens and you stop, nothing will happen to you. I kind of like that idea. I like the idea of giving an older homeowner some guarantees that if they stop making a payment, the roof over their head will still be there no matter what. If they don't want the interest to go up as quickly, they can send some money in. I kind of like giving people options, right? And I'm going to talk about the fact that we can get loans when maybe they can't qualify for any other financing. And I'm going to hit that on the next slide. Ida, you're my question person tonight. Thank you, by the way, for being an active participant. Okay, does the reverse mortgage is the reverse mortgage only for SFR? Can it be for multifamily? That's what she wants to know. Sure, you could buy a 4-unit, 3-unit, 2-unit SFR. You could buy a mobile home. You could buy a condo. Now, the mobile homes and the condos have a few other rules that make it a little bit tougher to get the loans there. But I've done purchase loans on mobile homes in Palm Desert, done them in a few places, and done them on multi-units. So sure, if you got a client that says, I'm a brave retired person, I want to buy a 4-unit property with the reverse mortgage, I'll have no mortgage payments, I'll rent 3 units out, I'll be cash flowing like crazy, and go for it. Why not? Well, maybe you don't want to deal with renters when you're retired, but hey, that might be for some people. Great question. So let's hop to our next slide. Let's talk about qualifying a little bit. Hopefully the reverse purchasing, hopefully this is starting to sink in. I mean, I'm really flying through this, by the way, tonight. I must be hungrier than usual because I feel like I'm really going for it. So hopefully you guys are going to throw your questions in there, right? And I can answer them for you. So let's keep moving. Now, I said that I can get people reverse mortgage, purchase loans, and refinances when they can't get any other loans, and that's true. But that doesn't mean every single person is going to get a loan, right? I'm going to disqualify some people. And I certainly wouldn't want you to sell someone's home before we have a loan to replace it with so they can buy a house. So I always like to pre-underwrite files. On a good borrower with no credit issues and they got some income coming in, I can give you a pre-underwrite in a couple of days. I don't have automated underwriting engines, so I can't just whip one out for you in 24 hours. It usually takes a couple of days. If a client has missed their mortgage payment for the last 7 months, they have low income, they got all kinds of problems, good chance I'm going to get them a loan, but it's not going to happen overnight, right? Sometimes it can take me a week, 2 weeks. The point is, I just want to get clients underwritten before you sell their home. So we need to look at them to see how long it's going to take me to figure out how to get a loan. What if a client's missed a bunch of mortgage payments and their FICO score is a 580, right? Are they out? No. I'm going to say, why are you missing mortgage payments? Oh, I got sick. My kids got sick. Something happened. Car broke down. Had to replace a water heater that was $2,000. Roof was leaking, right? I'm going to say that makes sense. No wonder you're missing payments. You're on a fixed income. You didn't see the fact that your roof was going to leak, right? Did you know about it? Did you put a hole in there with a drill yourself? No. So we're going to take that as that's why you have bad credit. We're going to throw that credit out, right? What if you don't have enough income to pay the tax insurance, which is this is what we want for income. You can pay your tax insurance. You can keep the lights on. So we use 14 cents per square foot for utilities and $500 basically per borrower to eat and have discretionary income. That's the basic formula. What if you don't have that? What if you don't have $1,700 a month, which is like, here's what Social Security is for 2 people. What if you only got $800 a month Social Security and you want a loan to buy a home? Well, there's other things I can do. I can start an impound account where the client puts down extra money. And that way, if they put a big chunk extra down, I'll pay the tax insurance. So that lowers how much income they have to have. Maybe they got some money in the bank. I can use that as income. I can do different things with this loan because it's a manually underwritten FHA loan for the most part. And it's a way to figure out problems, if you ask me, right? This is come to me with your loan problems when you're older so we can figure something out. If a client wants to buy a house or refinance a house or reverse mortgage, they got to go through counseling, right? I give them a list of nonprofits that the government has said, you're reverse mortgage counselors. And they spend about an hour on the phone with these folks, and the folks make sure they understand how the loan works. They make sure that they know what they need to do to stay in the home. And I will go through those actually. But in order for a client to get a reverse, they got to get a certificate from one of these reverse mortgage counseling companies. And of course, we'd want to do that before they would look for another home. If someone's buying a house reverse mortgage, you can't give them credit to cover closing costs, neither can the seller. Here's the gist of it. I talk about a lot of different things tonight, and man, am I going through it quickly tonight. I just don't want you to ever miss an opportunity for business for yourself when the word reverse mortgage comes up, or you meet somebody that has a reverse mortgage on their home. There's business there. I'm going to talk more about that coming up. But remember this number if you can't remember anything else, because this is for realtors only. And I usually staff this line 7 days a week. And I have people that can answer the phone, that can answer questions. Maybe you've talked to somebody, it's a Saturday afternoon, and you found out somebody has a reverse mortgage. And you're like, oh, I know Ryan said I need to get a hold of these people, right? Or I need to keep them. I don't know what to do with them. Well, okay, well, just call the number and be like, oh, this is what you got to do. This is the question you got to ask. Or they asked you a question they want answered. Don't want to let people leave your wheelhouse, because I've had plenty of experiences in the past 15 years and about the last 12 years with realtors, especially, where clients were asking questions. I don't want to say buying questions, but people are asking questions and sometimes they're like legitimate questions that are going to lead somewhere. The client is asking those questions. I want you to be able to answer them before they go somewhere else to get those questions answered. Because I did have a realtor call me actually a few months ago, about 4 months ago. They had a client was asking very specific questions. The realtor did a pretty good job asking the questions, but there was a couple danglers that they just couldn't answer, and they didn't get back to the client quick enough. It was like, I don't know, 4 or 5 days had gone by, right? Literally. And that client called a reverse mortgage company, found out they couldn't get a reverse, but did they send them back to the agent? No, they had their own agent. And our realtor friend lost the listing, even though he was their neighbor. He had worked with her many years. She told him he would get the listing when the day come. And instead, they chose a realtor 100 miles away. I don't want that ever to happen to you all. As a matter of fact, I'm going to say it right now. If you're taking my class tonight, you're the only people that I think should ever list a home when it comes to the question of reverse mortgages, because that's what I want to set you up for. And we're going to talk more about that coming up. First, let's get through a little bit of like ho-hum stuff you guys probably already know. Hey, we have a lot of older people here in the United States. Plenty of people that are old enough to get reverse mortgages, by the way. But here's where it starts to turn a little bit frustrating. We just don't have enough money in savings for retirement, right? Social Security is not enough. We know that. $20,000 a year in Social Security is average. $47,000 is what we need to spend. So there's a shortage there. Average savings right now is about 100 grand. That's even for our retired homeowners. And that's not going to help bridge that gap for too long. So we have shortages in retirement, right? They used to give out pension plans more, not so much to the boomers, but to their parents. So our boomers really kind of got the short end of a stick because pension plans got ripped away a lot in the 80s, right? Sears, if you worked for Sears and Brobrucks or J.C. Penney's back in the 70s, doing whatever, you got a pension plan. Do you know how many lawnmowers I could sell if I got a great pension plan and then I left at the end of the day and that was my work day? That sounds great to me, by the way. I love lawnmowers, but there's no pension plan. There's no Sears anymore. So nowadays it's like we're on our own to save for retirement for the most part. So this is why I really believe reverse mortgage industry has been around for a long time. Why people are selling their homes in retirement, because we need to get to some of this equity we have. Our 65 and older population has $8 trillion in equity. And even if the housing market goes down right now and some things happen, right? Who knows what's going to happen tomorrow these days? But I believe we're still going to maintain a ton of equity in our retired homeowners' houses. Now, here's some food for thought. Groups like the National Council on Aging have done studies. They said, hey, over 70% of homeowners or retired homeowners don't want to sell in retirement. They don't want to move. Hey, ask the national, boy, I'm starting to run out of words today. Ask the, not the California Association, the National Association of Realtors. I don't know why I can't think of it. If they do an annual study of home buyers and home sellers, it's on their website. I usually pull it down once a year. More than half the homes being sold are by our 55 and older population, right? So the same people are saying, we're not moving in retirement. I don't want to move when I retire. But then we sell our homes. Half the homes being sold are by 55 and older. I believe we got to get to that equity. We know we don't have enough money to retire on. It's just data. We know we have a lot of money in our houses. A lot of retirees, they know what they got to do. They're not going to bury their heads in the sand. We got to sell the house and at the end of the day, even do a reverse mortgage, right? Do the things we didn't want to do, but now we're doing them. So it's up to you and I to hopefully make that transition better. It's like, hey, you don't have to sell your home and then get something that's really cheap or move to a state you didn't want to move to. You can do a reverse mortgage purchase, get some money in the bank, get a lower priced home, have no mortgage payment. You could sell your house and maybe go buy all cash, I don't know, 50 miles away in Marietta. Or maybe you do want to move to Arizona or Idaho or wherever you can get. I don't even think you can get good deals anymore out of state, right? I remember looking one time because I was like, man, I bet you'd be a good investment to buy a house in Arizona since a lot of people are moving there. Dude, I couldn't believe how much it was just for a single family residence house outside of like Phoenix. I was like, dude, these are San Bernardino, Orange County prices. I lost my way. Anyways, the point is that older homeowners are listing and selling. We have to look for the cues. One of those things might be them starting to ask about a reverse mortgage for refinance. And now, you know, current day, I'm only helping maybe 35 or 40% of those people. So the other 60% of the people that aren't getting the reverse, some of those will turn to home sellers. All right. So let's hop back to my third bullet point, which is we have 54,000 active reverse mortgages in Southern California right now, right? Right in your backyard, folks. A lot of reverse mortgages, right? I've done a lot of reverse mortgages in San Diego, Riverside, San Bernardino, Orange County, LA. Just probably the most popular areas to do reverse mortgages in the nation, to be frank. What happens when our borrowers pass away? I can tell you what happens. First of all, if the house has equity, right? In this case, the house is worth $950. The balance of the reverse mortgage is $600. Well, if the heirs want to keep the house, it's their house. It's not our house. We don't own the house as a reverse mortgage company. We've just lent money. We just put a lien on title like a regular loan. So the heirs can say, I'm just going to refinance and pay you all off. And we're like, well, sure, that's what we want. We just want our money back. Heirs can refinance, get their own loan. We get paid $600. We're off title. More often, I see the heirs say, we're going to sell this house, sell it, pay off the reverse mortgage, and take the equity. We're done. That was easy. But was it? Okay, I'll get back to that in a second. How about if a house is upside down, right? Let's say the house is worth $700 and the reverse mortgage was $750. So it's upside down. Now, if this is a government insured reverse mortgage, ready? It's called a HECM, Home Equity Conversion Mortgage. How do you know you have that on a house? You look at the trust deed, pull up the title software, you know, where you get access to look at the deed of trust, and it'll say Home Equity Conversion Mortgage. And you know that's a government insured reverse mortgage. And if that's the case, and the heirs want to keep the house, we're not going to make the heirs pay what the borrowers or what their parents owed, because that's more than the house is worth. FHA says, we'll do this for you, people. We're going to let you pay the loan off at $665. Even though the loan is $750, you only need to pay out $665. FHA, we're going to write a check to the lender for the other $85,000. So if an heir is getting a house that has a government insured reverse, they should never have to worry about inheriting an upside down home, because FHA is going to write that check. A lion's share of the reverse mortgages that are out there active are these loans, the HECM. A lion's share of the loans being done right now are the HECM. So it's a pretty good chance if you find a house out there with a reverse mortgage, it's the government insured, and this is the rule for the heirs. Now, when the heirs say, hey, even if we're getting the house at a discount, we don't want it. Hey, that's okay. What are you going to do? Well, maybe they don't even call the servicer, right? And what happens is the servicer is going to send a letter out, and it says you have 30 days to get back in touch with us. If you don't, then we will move to foreclosure. So if the heirs don't call up and nothing happens, after 30 days, the lender or the servicer can issue a notice of default, and then they'll issue a notice of sale. So you got 30 days from the time the letter went out, 90 days on the NOD, plus 20 days on the sale. The house can go into foreclosure and be sold at auction to an investor in 140 days if the heirs haven't tried to keep it. Maybe the heirs don't want the house to go to foreclosure, but they don't want to keep it themselves. Well, they can have you short sell it, no problem. Now, how does this really go down for the heir, right? Is it just simple as pie? Does the servicing company call when they've heard your last parent passed away and say, I'm sorry for your loss. Let me make this really easy for you to get control of the house? No, of course not. Let's say the borrower's passed away. The heir calls up, says, hey, Mr. Reverse Mortgage Servicing Company, Hi, I'm the heir, and I'd like to take over the property. My parents passed away, and I'm gonna sell it. And this is what they might get. Uh, what's the address of the property? So this much, and who are you? Oh, what? And they just hang up the phone. Yeah, I've heard it. I've been on those calls before. I literally have. I've been on them plenty of times. Because the servicer has identified that they don't know who they're talking to. This person that they're talking to doesn't have any rights according to what they see. And so they don't tell the heir that. They just simply say, well, we can't talk to you. And now the heir is like, uh-oh, I got 30 days to get them to listen to me, to tell them what I want to do. Otherwise, they could start NOD on this thing, right? So it can go a couple different ways from there. Maybe the house is in a trust. And now the heir is going, this house is in a trust. They have to talk to me. I'm the rightful successor trustee and I'm the beneficiary, and they have to talk to me legally. Do they? Maybe they don't have the trust. Maybe the house is put in the trust after the loan was done. The servicer has said in the note that the borrower signed that says, you won't change title without us knowing. So now the servicer is like, hey, we're not talking to you. And the borrower and the heirs are trying to figure out, what am I doing? Hey, a servicer, I have a trust, click. Yeah. So these are situations that you can help on. Now, maybe the house was put in the trust before the loan was done, and the heirs think it's all good. And the heir is calling up, going, "I know you have a copy of the trust. And I'm calling because I'm the heir." Well, are you the successor trustee? Maybe you're not the right person. Is the servicer going to tell you? They don't have to. What if there's no trust? And the house has to go to probate, and the foreclosure has started by the servicer. How is that heir going to get control of the property when the servicer won't talk to him? Well, they can send a will in. Is their will done? Who's a personal representative for the estate on the will? I run into these problems frequently. So this is why I'm letting you know, when you come across a house that has a reverse, you're going to ask a couple questions. How's the reverse going? Great. You're going to let them know. Sometimes I know it can be a little tedious for heirs to get control of the property. Have you done everything that that the servicer wants you to do so that they'll give the heirs control quickly? A lot of them are going to be like, sure, don't know. I got to trust. Oh, was a trust in the house before or after the loan was done? I can help you, Mr. and Mrs. Homeowner. I'm a realtor, and I do have some knowledge, and I have some people that we can help make sure that your kids don't get stymied. They don't get hung up by the servicer when something happens to you. And let's make sure that everything is done according to how the servicer wants. I will help you if you come across a situation, because now I want the heirs to be like, hey, that realtor, Marcel, he helped get this stuff together, and now the day is here. We want to call him because he's the guy we need helping us with this sale. I've seen it. It happens. I don't want anybody that's never taken my class to be an agent that gets a reverse mortgage listing to sell. You guys are spending your time here, and I believe you deserve, because you're going to be able to help these heirs before the problem comes, and you deserve to be rewarded for that. Okay, so find houses with reverse mortgages on them, folks. All right, let's check this out. With the reverse mortgage, the government or bank on the home. Remember, we're just a lien on title. And all we want to do is get paid back when the home sells. We can't tell you who gets the house. All we can do is be a pain to the heirs if they don't have their paperwork in order. But the heirs eventually get the house. Any equity that's in it goes to the estate. Heirs, you can get up to a year, by the way. If you have everything done properly, and this is how you can help the heir again, you can help that heir get a full year to sell the property and without having mortgage payments need to be made. Now, the mortgage balance will go higher while they're trying to sell it, so that it's in their best interest to sell it quickly. And then back to the age-old question, right? If I live a very long life and I've never sent a payment in on this reverse mortgage and the house is severely upside down, can I still live there? And remember, the answer is yes. And your heirs can still inherit it. And as a matter of fact, if it's severely upside down and it's a government insured reverse, your heirs can inherit it with equity. Kind of cool. That's something else you can be letting these heirs know. So much stuff that when you talk to an heir or a person that has a reverse mortgage that they don't even remember or know, that they're going to be like, oh, this person, they're pretty smart, this agent. You're smart because you're taking my class. Or you have nothing better to do on a Thursday night. All right, either way, happy you're here. Okay, this is how you mess up a reverse mortgage though. Number one, if you get a reverse mortgage and you move out, you rent the house, big no-no. You have to remain an owner occupied. That we don't want you there every day. I don't care what you do. You can be gone for a year. You just got to get back within that year, let the servicer know you're there, and then you can get another year. So occupancy, big deal for reverse mortgages. You just can't turn it into a rental property. You can rent rooms out, sure, but you got to keep a room for yourself. You got to keep tax and insurance paid, otherwise you can get a notice of default and get foreclosed on. Remember, we do have that thing called, it's like an impound account. It's called a life expectancy set aside to pay tax and insurance for borrowers. But it doesn't come easy. It doesn't come automatically. If they're buying a house, they got to put a lot more money down because they got to fund that impound account. It's if a refinance, then they're going to get less cash out because I got to fund that impound account. If a house gets broken windows, shingles missing, that's not FHA standards anymore. That's health and safety issues. The client could get an NOD. Hey, you got to fix these things. I haven't had any of my borrowers call and say, Ryan, I got an NOD because my house doesn't meet standards. So I just don't know that it happens very often. I've been doing this, like I said, 16 years, 15, 16 years. My borrowers haven't called and said that they have that issue. Maintain the home to FHA standard just means the house, whatever condition it was, and you got the loan, keep in that condition, right? How do they know a house not condition? I don't know. I really haven't heard too many stories on this. Maybe a neighbor doesn't like you and they throw, I don't know, a shoe through your window, and then they send a letter to the reverse mortgage company saying this person has a broken window. It's not something that's been on my radar that I've had to have a problem with. But just know we should be keeping the, roofs in good shape and no broken windows, and that way you stay off any radar. I can't see what's going inside. I mean, I'm not going and knocking on the door once a year to see if you have hot water. All right. Every age gets a different loan amount. So how do you know what age gets a loan amount, Ryan? I got to tell you, I don't even know off the top of my head. If every age gets a different percentage and interest rates change that, you need something to help you out with that. You can download this app. I made it for your phone. It's REV, the number 4, PUR. It will estimate a loan amount based on age. You put the ages of the clients in there. You put the value of the house, click calculate. It'll tell you the loan amount. It is an estimation. So if you need a real good number, there's a button on there you can call or email, and we'll get you a good number. But this is at least a way to start estimating, right? So you have a rough ballpark. All right, put the client's ages in there, value, hit calculate. For FHA reverses, okay, if you're married, well, cool, I guess. But the whole thing about being married with an FHA reverse is you can have a spouse under 62. We don't care how young they are. We're going to lend less money because we lend based on the younger person. So in my professional opinion, if you're going to get a reverse mortgage, marry somebody older. Okay, so you heard it here from a professional. Well, anyways, the point is that the younger you've married, or the younger you are, as a matter of fact, the lower the loan amount. If you want to do a loan with somebody you're not married with, I don't care, but you both got to be over 62. If you want to do a reverse mortgage and you're buying a house or refinancing a house and it's worth more than $1,089,700, well, we're not going to give you any more money just because you have a more expensive home. So let's say you have $1,089,000 home, and I don't know, you're 75 years old, and let's say I'm going to give you $500,000, right? And your neighbor who has a $2 million home, right? Like, she's all that better, whatever. She's like, my house worth $2 million, so you're going to give me $1 million, right? Because you gave my neighbor $500,000 and my house worth twice as much as them. I'm like, no, you're getting $500,000 too. Because we stop increasing loan amounts as soon as your house is worth more than $1,089,000. Sorry. Sell that $2 million home and buy $1,089,000, and now you'll get more cash. Well, the investment world said, Ryan, there's probably a lot of houses out there, $2, $3, $4 million that could sure use a bigger loan amount than what FHA is willing to insure. And indeed there is. And I can use these loans to get people bigger loans if they have expensive homes, non-FHA reverse mortgages. And you only got to be 55 or older. So what's the big difference? Let's talk about rates. A government insured reverse mortgage interest rates about 6 to 7%. Non-FHA reverse mortgages interest rates are about 8.9. to 10.5%. So your rates are higher on the non-FHA loan. FHA mortgage insurance is on FHA reverse mortgages, 2% upfront, 0.5% annually. So now you know the rates and what it costs on reverses and the difference between a government and a non-government. So it's very interesting. I gotta say, I saw somebody who raised their hand. Can you just throw ahead and throw your question inside the chat or the Q&A, and I'll grab it, because I think the raise the hand thing needs a microphone. So throw your question in the chat and the Q&A, and I'll jump right on it. All right. Just a couple things. One, I see heirs selling reverse mortgage homes. So do yourself a favor. If you find a house with a reverse mortgage, don't let that person go until we know that I'm going to make sure the agent that gets to list it. Number two, you should be asking them, how's your reverse mortgage? Cool. Hey, are you getting all the money out of it you need right now? There's quite a few people that I'm seeing more and more now who are not able to refinance anymore, who are saying, no, I can't get any more money out of the house. Even though I don't have a mortgage payment anymore, might need to sell and buy something smaller and get another reverse, because that might be the only way to get more money out of the reverse. So hopefully you got that. I beat that thing. Boy, do I beat that point like over and over again. Okay. Older homeowners, they definitely sell homes to be closer to home, family, if they're having tough time with bills, the house is too big, or they can't get a regular reverse. But here's the thing I want to note about this. Older homeowners will sell homes no matter what rate they have on their current loan, which is different than what I've heard and seen with younger homeowners who have all these great low 30-year fixed rates. And they're like, I'm not ready to give up my 2.5% 30-year fixed to take a 6.5% because I want to get a different house. So those houses really aren't going on the market, right? But an older homeowner, when they need cash, what rate they have on their current loan, it just doesn't matter. They need cash flow, and they'll trade in those loans for smaller houses with reverse mortgages, or they'll get refinance reverse mortgages, and they're willing to pay higher interest rates because it means more cash flow for them in retirement, and not necessarily worried about having a low rate to make a payment. So that's what I see out there, y'all. Okay, Regina, cool. I skipped you, Tracy, because Regina had her hand raised, I think, and now she's in the chat box here. Okay. Let's see, Regina. Do they have to own a home? Can they get a reverse mortgage if they're buying for the first time? Hey, Regina, great question. They don't have to own a home as long as they got enough of the down payment. Remember, the down payment is bigger on reverse mortgages, right? It might be 30, 40%. So as long as they have a big enough down payment, they can buy a house with a reverse mortgage. They don't have to own a home previously. Tracy, you got kicked out of here. Maritza kicked you out early. Let's see. I think you got a question here. Was it, what are the upfront fees? I think that's what you're asking. So on a government insured reverse mortgage, your upfront costs are really your mortgage insurance, title, and escrow. Now, sometimes there is origination fee depending on what rate you want, but sometimes you can get a reverse mortgage with simply the upfront government insurance, which is 2% of the value under $1 million or under, and then normal title and escrow fees. So it's pretty much like a normal FHA loan for the reverse fees. On a non-government reverse, there's no upfront mortgage insurance, and now you're just talking about title and escrow fees, and then depending on the product, there may be origination, depending on the rate. Sometimes there's no origination, but sometimes if you want a low rate, you may pay origination, so it varies. For a while there, I was doing no-cost reverse mortgages. Like 8 or 9 months ago, when the market was still good and interest rates were going out of control, I could afford to do a no-cost reverse mortgage with someone, nothing upfront. Can't do that as much right now because the rates are up, and it's a tough working in these loan environments a little bit. I hope at some point in time the rates calm down a little bit and we can go back to doing some pretty cool reverses, some of them with no cost. But in general, upfront mortgage insurance on FHA insurance plus title and escrow, and then the non-government loans are going to be your title and escrow, definitely. I hope I got that question answered. Thank you for the questions, by the way. Love them. Love them. I can't type my email address in the group chat for a copy of today's presentation. Ariel, Maritza should be reaching out to you here shortly to make sure you get that. And, listen, we're going to want to be able to get all your emails because I'm going to show you a couple things here, by the way. One of the things that I have found is fun to do, there you go, Ariel. Boom, you got it in there, is sometimes based on the last 15 years of doing these reverses, I kind of have an idea of the homeowners that have sold their homes, why the older homeowners were selling, okay? And I've kept note of those things. And so some of the things I do to try to help y'all, and I just have fun in general, is I've written newsletter specifically that speak to an older homeowner that is thinking I might need to sell. And these you can edit on my website to put your name on them and then print them out. And they think you wrote the newsletter. Cool. It's like, does Prop 19 help me if I need to move? Do I get paid capital gains on this house I have? How does a reverse purchase work? Should I sell my house to an all-cash buyer with no realtors involved? Well, there's articles in here that give them an idea of these questions, right? Because if they're asking these questions, they're kind of leaning towards possibly selling, and you're answering these questions. If you want to know who maybe you can throw these at in your own neighborhood, on this Title Pro thing, I'll give you logins for all this stuff. I go into Title Pro and I pull data. You'll watch on the video based on who has sold homes before, older homeowners. And then in one of the videos, I hop in the car and I go knock on the doors to see how close I got to, is this really legit, Ryan? Did you actually maybe find someone that's going to list based on the software? And then it's cool. So watch the video. I think I got pretty close on one, but you can do the same thing. And if it's on your street or like in your block and it hits with the data I tell you to put in there, then go put these newsletters on their doors for 3 months in a row or something and have some fun with it. I'm very pro. It's fun to find clients, right? And I've been in real estate a long time now. I think I've had my real estate license actually for about 20 years, and I mainly focus on loans for the last 15 years. But there's a while there when I was out hunting down houses to buy, right? And so I kind of took those things and kind of meshed them here with what I've seen older homeowners do. And you can take a look and have some fun with it, right? It's all on my website. Maritza's going to give you logins for this thing. And you're going to be able to reach me anytime on it. There is like refresher stuff on the website too, like little videos here and there in case you're like, hey, how does that line of credit work with a reverse refinance, Ryan? How do I get a line of credit? How does that line of credit grow over time? Can I get more money out of it? How does the trust work with the reverse mortgage? What happens when in the future, when the clients pass away? A whole slide on that, right? I want to keep information in front of you, even if you don't want to sit through this course again. I'm really sad actually, but I get it. Okay, maybe check it out in another 3 months. Okay, but the point is to keep information in front of you. By the way, I'm just so impressed. There's so many people on tonight too that are you guys just got done working all day, and I got done working all day. I'm pretty tired. I feel like my eyes are closing as I'm talking to you, but I'm still excited that you guys are all joining me tonight. Okay. So Maritza's going to tell you how to grab those. If you want to grab the free stuff, the newsletters, all the stuff that's on the website, or just hop in there and watch some of the videos where I'm trying to figure out who's going to list their house and see how close I get. And you can just do the same thing with all the logins I'm giving you. You can use the same software, click the same boxes, just do a different map of where you're at. Don't do the map of what I did because that's in orange by my office, right? Do it in your neighborhood. See if a house pops up. That's fun. And then print out the newsletters. I got it all there. I wrote it all for you. It's for free. Have some fun with it. I'm going to have a final closing thought, right? Like Jerry Springer does, right? But hopefully it's better than that. Maritza, you want to tell them, make sure in case you want to get logins, how they're going to do that. And then I'll come back for closing. And you guys drum up some more questions. You guys are all still sitting here with me. I thrive on these questions, man. It gets me excited.
Okay, yes. So thank you, Ryan. So in the meantime, I will let them know how to get logins. So if you would like to gain the logins or access our tutorials, go ahead and send me your emails and I will get those to you by tomorrow. Once you do that, again, you will be receiving your emails, which in the email you will be able to see some logins. And those are the logins for the Title Pro, as well as for our website, where you'll be able to see the video series that Ryan mentioned, as well as our marketing materials. All you have to do is click the activation link and set up a password. And then you will also be able to see tutorials on how to use your new Title Pro logins to find those older homeowners that are likely to sell in the area. And if you do have any questions about your logins or need support, just please feel free to give us a call. You can go ahead and email Ryan directly, or I'll also insert my email so you can email me as well with any questions that you might have. So this is our realtor hotline, and we will pick up the phone for you as much as we can. You will also, this is our website, the reverseeducators.com is our agent resource website, which you will also be able to see our future classes with North San Diego County Association of Realtors there as well.
All right, thank you. By the way, if you see Shirley, thanks Shirley, because she helps us to make sure we get this class on. And she was on here earlier. She stayed late. And man, that's great stuff. Okay, just a couple things to remember before you all jam or ask questions. I hope you don't think a reverse mortgage is just a mortgage anymore. I hope you see how it's a tool that you can use to engage clients. I hope you see that with the way the market is today, not everybody's going to get a reverse, and some of those people may be actually your future clients. I hope you've seen that just because a client has a reverse mortgage right now, that doesn't mean they might not need you to sell the house. And that certainly doesn't mean that the heirs aren't going to want an experienced person to list their house. And I want you to be the person that does that. All right. So let's see. All right. Did you guys enjoy the class? Is there anything, Tracy? You're so welcome. Thank you for the thank you. Anything else that you guys wanted me to cover that I didn't? Anything that you guys, I don't know, what? Listen, y'all, I'm here and I'm not going anywhere for a little bit. And if you've ever had a thought about a reverse mortgage, maybe you have a husband and wife get a reverse mortgage. Husband passes away and the wife wants to remarry. Can she bring that new spouse on the loan? No, they have to refinance to do that, right? How long does a client get? Remember to sell the home. The heirs can get up to a year, but if they don't do it properly, that property can go into foreclosure and be sold in 140 days. So you can actually help the heirs get more time and sell that house. Let's see, what else? Oh, hey, how about can you have an ADU with the reverse mortgage? I get that question. I got it today from one of your members there that you guys work with. Yeah, you can have an ADU in a reverse mortgage. Sure, you can rent out rooms with reverse mortgages, and as long as you're owner occupied, there's no prepayment penalties on these loans. If a client gets a reverse mortgage and buys and they decide they want to do something else, they can sell it. I've had one client that I can think of in the last 10 years on reverse purchases who actually reverse purchased with the house and then sold it, right? And they called me because they're like, Ryan, we don't want this reverse mortgage anymore. And when someone calls you and says that, I'm like, oh geez, like what happened? I'm kind of worried because I don't want people not liking what we do. And it was a son, and he actually said, my dad he doesn't want the reverse mortgage anymore because he lives it by himself. And so we're selling the house. He's going to come live with me. The reverse is fine, whatever, right? And neither here nor there to us. He lived there for a couple of years. His balance went up for a couple of years. But at the end of the day, we're selling the house so you can move in with us. And I was like, okay, good. I didn't want you to call and say, that there was something wrong with the loan. So that, that can be a possibility. Remember, these loan amounts are the same in all states. I do see, I'll tell you what I've seen a couple times that this is interesting, where a client moved out of state, right? And I'm sure you hear a lot of clients moving out of state because maybe they are thinking it's going to be cheaper to live somewhere else, or I'm going to get more of a house somewhere else, And don't get me wrong, I have those thoughts too. I mean, I have these visions of being a cowboy on a ranch, with acres and acres. It's never going to happen, but I like to dream about it. But some people move, and I've had agents call that go, Ryan, I have a client that's moving back into California after living somewhere else. And they can't afford to get back in without getting a loan. And of course, getting a regular loan isn't great. So I have seen clients, they've sold their houses here. They went and moved somewhere else for a while. They realized for whatever reason, they need to get back into California. And then they use a reverse purchase so they can afford to get back into California, right? Because that's the thing that a reverse purchase can do. Because you're not obligated on that mortgage payment, it can help increase purchase power. So that way clients have a better selection of homes to look at. And I don't talk about that a lot, but that's indeed what we see sometimes, is that the tool the reverse mortgage can help, or can you be used for, is keeping clients in the state, maybe at a purchase price where with a regular loan or whatever it is, they wouldn't have been able to afford to do that. But now they can do that. So there's an idea, right there. As a client thinking, man, I can't stay in my house anymore, and I got to sell, and I'm going to go someplace I don't like because I can't afford another home that's as nice as this one. And that's not the case. Sometimes we can keep those purchase prices up. And I do hear that quite a bit, like people moving from like very expensive parts of LA, $2 million house. I had a lady that had a $1.7 million house in LA, and her husband got sick. Remember, I said that's one of the reasons that people need to sell. They missed some mortgage payments. They had a pretty big mortgage on this thing. They were only going to net like $500,000 in this house sold. And she kept on saying to the realtor who had called me, she's like, what are you going to do to me? What are you guys going to do? She had a New York accent, right? It's really funny. What are you going to do to me? You're going to make me move to somewhere. You're going to make me move to Alaska. You're going to make me move to Arizona. Like, she kept throwing these states out there like we were going to torture her. And I was like, look, have you seen these brand new houses in Temecula? They're unbelievable. Like, you can get and this is back like 3 or 4 years ago. So you can get a crazy good house for $700,000. You're getting 500 from the sale of this house. Why don't you chunk down 350, put 150 in the bank, and get a really nice house? And she did that. And she is so happy now. You know a crazy story about this? They were so far behind in that house they were on, in their mortgage and their cars. After she moved out to Temecula, her car got repossessed. And she's a really good sport, and she's laughing about it. She's like, but Ryan, I got 150 in the bank now. I got no mortgage payment. They repossessed my caddy, but I'm just going to be able to go out and get another car now, and et cetera, et cetera. But so, sometimes these stories are great and you can't make them up. But she's happy out there. She loves it out there. Who wouldn't love to be in a $750,000 house in Temecula? I'd do that right now if I didn't have to report to work every day and, didn't need to be local. So anyways, I just want you guys to know there's all kinds of stuff are possible. Find older homeowners that are tight on money, find older homeowners that have reverse mortgages, find older homeowners that are talking about reverse mortgages. And the last thing I'm going to say is let's figure out how to turn them into something that might not just be a refinance reverse for them, but something that you and I get to work on and have some fun. It is so much fun watching people sell homes and rebuy homes with reverse mortgages, and it turns out great. I love these stories. It's so fun to be a part of that. I like them more than doing refinances. Those get boring after a while. Yeah, I'll keep you in your house. I'll give you money. Ho hum. Taking someone who's kind of strapped for cash, putting them in a really nice house, putting money in the bank, and seeing the difference it makes in their lives. It's great. Thanks for joining me tonight, everybody. Stay in touch. Hop on another class. Shoot me, Maritza. Did you put my text? Let me put my cell phone here in the chat. Here, I think I can send it to everybody. In case you guys want to text me a question, you guys are always welcome to text me quick questions, and I can usually get those answered pretty fast. The longer questions in the email, those are harder to get to quicker. If I don't respond by the text, hop on that 888 line. Tracy, my favorite, asked me another question. What did you say it takes to qualify for a reverse mortgage purchase? Okay, great question. So again, remember the down payment is the biggest thing, right? We have to make sure they have a down payment that is adjusted for however old they are. The older they are, the smaller down payment. I'll just give you a quick reminder on that. If you're like 90, you're putting down maybe 25%. If you're like in the mid 70s, you're putting down close to 50%. If you're young to me in the 60s, you're putting down with like 60%, right? Okay, on top of that, we do want to make sure you got some income because we need to make sure you can pay some bills. If you don't have any money in the bank and you're using all the money down on the reverse mortgage, then I need to make sure you have enough cash flow to pay the tax insurance annually. So we just look and see what the taxes are. Let's say the taxes are $6,000 a year. Well, that's $500 a month that you would need to have. We need to make sure you have $500 a month per person for whoever's getting the loan. So if you have 2 borrowers, that's $1,000 plus the taxes, $500. Let's say the insurance is $1,200 a year. So now that's $1,600. Let's say the square footage on the house is 2,000. That's $240 utilities. So about $1,840 is what those people would need for income. If Social Security doesn't cover that, remember, I can look at assets they might have in the bank to make up for income. If they have extra money to put down, I can start the impound account. That would lower how much income they have to have because they're not paying the tax insurance anymore. So now they only have to have $1,240 in income. If they got bad credit, well, we can deal with that. Sometimes it becomes a problem, like if they're in the middle of bankruptcy, well, that's going to be a little rougher. I can't give a loan to every single person out there, but I can give a loan to a lot of people out there who didn't think they could get loans. Keep that in mind. Thanks for your question, Tracy. Really appreciate it. Okay, y'all. Go out and have a great evening. I'm glad you're welcome. I'm glad you spent some time with me tonight, and lots of stuff to do Thursday night. Bonnie, hey, thank you, Bonnie, for thanking me, and Tracy, you as well. Hopefully you guys enjoyed the class, because I try to keep it very up to date. I try to keep the information really current for you all, so it matters, so that you can actually take it out in what you're doing right now and maybe put it to use. Have a great night, everybody, and I'll see you soon.